Hello, this is Steve Malone with CompassFX. Hope you're doing well today and again some good trades. Taking a look at the New Zealand dollar, often referred to as the Kiwi, I think we have a buy on the dip strategy set up. And what we're going to be looking for is the market to potentially drop down to a level. If that level holds, then we look to buy on the dip on a push back higher. Let me walk through this setup for you. If you take a look at the 15-minute chart or the 30-minute chart, the intraday perspective, you will see that the market right now has a head and shoulders pattern. We have this shoulder here, kind of a double knotted or double top head right here, and it's setting up another shoulder over here, and we have a neckline, a slight inclining neckline across here, but nonetheless we have a head and shoulders type pattern. Typically with the head and shoulders pattern, we look for a break of the neckline, then a move back down to the floor. Interestingly, that floor right now, if I step out and take a look at the 30-minute chart, that floor comes in right at about the 10-day EMA. See where the support is back here with the start of the head and shoulders pattern? And you take a look at the 10-day EMA, pretty well right there. So I would suspect that if this rolls back over, possibility is to enter short from right around that 83.90, 83.80 area and potentially catch a trade back down towards 83.60 area. Now, there's another pattern involved here. If we step out and take a look at the hourly chart and I run my fib, there's one other pattern that would suggest a downward movement, and that is a 1, 2, 3 down. What I'm saying is you get a high, a low, and then you get a retracement, point number 3, coming back to the 618. The market held the 618, is pushed back down to the 38.2. If this area right in here holds and we get another push lower and a break here, those work together to see a possible push down to back to the 10-day. But it could go a little bit further. If you take a look at this, there's the 21-day that sits down here around the 83.30 level. So there's a possibility of a push lower here on the 1, 2, 3 down pattern. That would put in a nice little target. Then what we'd look at is the bigger picture for a bounce back up, because I think there's a possibility of seeing the Kiwi go back up to a high that we saw back in December, and that's the 84.77 level. Let's go take a look at the daily chart. On the daily chart, we've seen since May 2012 a strong upward move. You see this trend line coming across right here. Back in December the 14th, 2012, we hit this high around 84.77. I think there's a possible push up to that level. Then if we step out a little bit further in time, we come back to these levels back here. We have this high point, comes in right around 85.65, and then a higher level that would put us up somewhere in the ballpark to 88 area. Right, that pin high goes up a little bit higher here, but there's that possibility that if we get a break here and a push on up to that level in the days to come. Now, if we drop below the 83.30 area with a strong trend line to the upside, that's going to get tested. That right now sits in the ballpark of about 82.40. So if we break down from 83.30, there's a possibility of going down another 100 pips or so. But overall, big picture would be the test to the upside as long as risk appetite remains in the marketplace. Right now, investor risk appetite is elevated, and we see a lot of movement or market flow out of bonds and into equities. That would suggest a buy on the dip pattern. The short term shows the potential downward move, whereas the long term suggests an upward move. In that case, look for a buy on the dip. You're buying in at a better price. So currently right now in the marketplace, we've got support that ranges in the neighborhood between 82.40 to 83.60 area. On the intraday would put us in that 60, then 83.30. Longer term picture would put us around 82.40 area. And then we would look for the move back up to the December high of 84.77, then a previous high that we had back in August of 2011. That puts us up around 85.65, and this high that we had going back into early August of 2011 puts us all the way possibly back up to 88 8800 to 8840 level if the market continues to push up there. So monitor the market. If we continue to have strong equities in the marketplace and more risk on the marketplace, consider watching the New Zealand dollar and look for the buy on the dip opportunities. Well, folks, this is Dean Malone with Compass FX. Hope some of the information I've just shared with you about looking for a intraday move back down to around this 83.60 to 83.30 level, and then a possible bounce back up to a high in the ballpark of about 84.77 right now. That would take out this area right here. If we took that out, then we would look for progression higher. Well, folks, this is Dean Malone with Compass FX. Hope some information here has helped you out. Y'all get some good trades. We'll talk to you next time. Bye-bye.